we'll start by inviting each of these gentlemen up to give us sort of a 3 to 5 minute quick look at who they are, who their company is, and why we should care about them. Maybe that's an odd way of phrasing it. But anyways, let's go with that. Jeff, why don't you go first?
Okay. Hello, everyone. Just a quick overview. Osisko Metals, we started about 4 years ago, 2017, going on 5. Actually, this month, it's been 5 years. And we targeted base metals. I kind of come from that background from Noranda. We looked in the east, but we found Pine Point in the Northwest Territories, and we've been drilling it to get the historical resources to indicated categories so we can proceed with feasibility and develop zinc and lead in the north. There's about 7 billion pounds of gross metal value in that project, and we're working hard to get it to feasibility, and we can see a timeline of about 2026 for production. It's some of the cleanest concentrate in the world. Everyone wants a little bit of Pine Point. The traders do globally. We've been marketing through Contact, and it's a great, solid project, and we're moving along. Recently, because of everything like Gwen said in her excellent presentation, Dr. Copper came back. I used to work at a copper mine known as Gaspé Copper, and we're negotiating to get a definitive agreement with Glencore. I worked there, my partner worked there, he knows it better than anyone, and there's 3 billion pounds of copper there. So that's in just gross metal amount, but if you start multiplying the value of today, the high price ranges that we're in, that amounts to about $20 billion of gross metal value. Our market cap is around 80 million. So there's lots of upside in these stories, and it's exactly what Gwen has been saying. You know, you need the battery minerals. We do need it for the energy transition. That's new to the exploration and development group. We have just started a lithium company, Gwen, that I want to tell you about. It's very, very exciting. It makes my blood flow a lot faster every day. But on the base metal side, you know, the green economy, so just some of the things as we shift in this ESG world, you look at projects differently. And after 5 years of construction in downtown Montreal, all the Expo 67 highways that had to be replaced, if you look at cement construction globally and consider it as a country, it's third in carbon greenhouse gas emissions, third behind the States and China. It's 8% of world's greenhouse gas emissions. So we just replaced all of our infrastructure because the rebar wasn't galvanized. So the cement falls apart, it spalls, it deteriorates, and you have to replace it. Well, if you would have galvanized that rebar, you would have had it for probably 100 years. So I think going forward, and everything that was replaced in Montreal is galvanized. So we need zinc to protect metal and protect our infrastructure so we don't have to replace it constantly, again and again, contributing more and more greenhouse gases. It's a totally different way to look at commodities and how we're moving them forward. For copper, as Gwen, a lot of my notes I'm not going to talk about because Gwen covered a lot of stuff in her talk, but copper we need it to protect. Today, Mr. Lassonde was saying on a panel during the PDAC that copper is more important than lithium. The demand for it that's coming. So that, we've got to get our head wrapped around that one, but he's probably right. And so that's why we're in base metals, and we're very happy to be developing Pine Point in the Northwest Territories, and we have a new project on the horizon, hopefully with Gaspé Copper in Quebec. Thanks.
Thanks very much, Jeff. Paul, come on up.
Well, thanks, Gwen. So Western Copper and Gold has been developing the Casino Copper Gold project up in the Yukon for a little over a decade. And, you know, this is actually one of the real gems of the North. The Casino Copper Gold project has got 11 billion pounds of copper, 21 million ounces of gold. So it's significant in both the copper and the gold part. If you look at this and you sort of stack this project up, this is the casino project is the 5th largest undeveloped copper gold project that's controlled by a junior mining company. We've been developing this, like I said, a little over a decade. Past 2 years have by far been the most exciting in the company. You know, about 2 years ago, we essentially doubled the resource, brought it up to where it is today. A year ago, we brought out a PEA on the project. So the PEA shows that the project has a net present value of 2.3 billion, IRR of 19.5%. That's at $3.35 copper and $1,600 gold. If you look at that at spot, you're up to mid-20s in terms of IRR and an over $4 billion net present value. We're currently trading around, we're at 300 million market cap, so we're trading at about, 15% of that net present value. So, certainly a good investment thesis. And then the other big news is that we brought in Rio Tinto as a strategic partner. So we brought them in a year ago. The goal of this partnership is really to spend a year with them, working closely with them on the project so that they have a chance to evaluate it in more detail, and then to hopefully sit down and talk about next steps. So we're finished the first year working with them, and so we hope to be sitting down with them relatively soon. With that, I'll just leave it at that. I think we're going to be talking about critical minerals and everything else about that, and I'm looking very forward to having that discussion. Thanks, Gwen.
Thanks, Paul. And Rohan, please come on up. Tell us about Norzinc.
Great. Thanks, Gwen, and thanks everyone for coming. For those who may not be familiar, Norzinc, we're developing the Prairie Creek project in NWT, pardon me, in a very high-grade zinc-lead silver project, one of the highest-grade undeveloped projects in the world at approximately 24% zinc equivalent, about 16 million tons in total resource, with significant exploration potential, and I guess to put it in pounds equivalent, comparing to the projects you just heard about 6 million pounds of zinc equivalent. We put out, the project has had a fees at a lower throughput rate from 2017. We've been working on a higher throughput rate of 2,400 tons per day, put out a PEA at the end of last year showing 300 million NPV at $1.20, at $1.50 would be 500. And we're trading even far lower than my colleagues up here at 20 million market cap approximately right now. We're, in terms of stage, imminently to receive updated permits for that 2,400 ton per day expansion, and then final permit conditions for getting road access, and that's one of the critical aspects of this project is access. 170 kilometer access road will be the first land access to the project in 40 years. It's a brownfields project that was built under the Cadillac Silver name by the Hunt brothers and abandoned in the early to mid 80s. As far as zinc overall, you've heard some of that, galvanizing clearly being, an important part in addition to, the important usage that Jess mentioned. Figure I've seen that the lack of galvanizing costs the North American economy about $400 billion a year in deteriorating infrastructure. And as well, some of you may not know, some of the other uses of zinc that reinforce why it's on the critical minerals list. It is a battery metal, although not to the same extent in EVs, very much so in industrial scale. Other batteries, the technology, zinc air is the name, but also zinc carbon, from how it's used. Batteries, are an important part of, and then in particular, smaller percentage, but a large usage important usage in human and general health, as well as fertilizers. So that's just a bit on zinc overall, and look forward to the discussion. Thank you.
Thanks, guys. Well, I certainly have some questions that I will start off with. Anybody else who has questions, certainly stand up and make yourself known. Do jumping jacks or something, and I will. I'll incorporate your questions in when the moment happens. So let's talk. I think it's interesting on the investor interest angle, sort of critical minerals and investor interest. You gentlemen have all been involved in mining deals for a reasonably long time. How has investor interest from the green angle shifted, evolved? Do you have notable stories or things that have happened that have that stand out to you or not about how that has happened, and from the retail angle and from the institutional angle. And I mean, I'm talking about them being interested in your deal because you're mining zinc or copper, as opposed to them being mining investors who are like, oh, you're an undervalued opportunity. How has that sort of, we would wish it were an influx of interest, but how has that shifted over the last little while? I don't know if you need to turn those on or not.
Well, actually, for zinc, it's remarkable. Can you hear me without this? Yeah, for zinc, it's remarkable because the market doesn't get it.
I think she'd like you to use it because then she can record it better. For the people who are watching.
Okay.
Yeah.
So we find we've compared the S&P to base metal index, and we're at 100-year historic lows.
Right. This is the thing. No capital
And everything
interest.
that Gwen just said, with this super demand, there's, I did a keynote last year at the CIM, and Glencore slide similar to what you showed from Wood Mac. We need 4 times the nickel, 4 times the cobalt. Good luck on the nickel. Zinc, we need twice as much, and copper, you need twice as much. It's a forecasted super cycle for the next 30 years, but we've been living 100-year historic lows. So there's a disconnect, and when it changes, it's going to be, I think, exponential, because then we're going to be against the wall. Just this morning, I was thinking of things to talk about, and so right now, zinc's at a record price level. It's at $1.70. It touched $2. Same thing back in the super cycle in 2002. You get down below a certain level of metal, which we call critical levels. So all my years at Noranda, on the bulletin board, we looked at inventory levels and prices every morning, and the cycles were basically 600,000 ton oversupply, you're at 90 cents. 300,000 tons of supply, you're at about $1.20, and those were the cycles. Every 5 years, 7 years, peak to peak, trough to trough, fairly predictable, fairly within a certain bandwidth. But after the rise of China, everything got blown out of whack and all the prices tripled. And so now we're back to those 2002 prices. So we're at about $1.70. And on the critical amount, like I've been talking about critical amount of inventory, the LME is not a good indicator because there's a game played called bonded warehouses, and you can see that in the charts of inventories where, all of a sudden there's 50,000 tons. Well, that's some warehouse that crossed 50,000 tons of metal from one side of the warehouse to another. So they manipulate price a little bit that way. That's happening less. The inventory level right now is 85,000 tons. So it's less than a third of critical levels. Prices are at record high levels, and that has not translated to the equities as we've all, well, I've stated at our market cap of 80 million, it hasn't translated. Lead is the same thing, it's at $1.05, that's record level. Used to be in my day, back in Brunswick mines, it was 20 to 25 cents, very boring material. Very predictable lead battery market. Nickel, I worked at Raglan mines, and it was kind of, all the projects we did long-term planning, we used $3, and if we were really aggressive, $3.25. But nickel is a different commodity because there's less of it in the world, and there's a bigger need for it now. But so now it's at $12, and it's at 70,000 tons. So it just takes a ship to blow a motor in the ocean, and that'll go to $20. It's that tight of a market. And that's exactly what happened in 2008 when I was working there. A 3,500 ton per day mine, like when it goes from $6 to $22, it's a huge change. So the inventory levels are down again.
And yet with all of these numbers, as someone who operates a zinc company, you're not seeing institutional
Nope.
or any particular flood of, we want exposure to zinc, we want exposure.
No, and we're transitioning into that paradigm shift that you're talking about where, I used to be in the optimization of projects and everything was all about just-in-time inventories. Don't lock your money up in inventories, just in time. And now with the supply chain challenges, everybody's starting to talk about just-in-case inventories. So now you're going to see hoarding happening. So there's going to be less of this bonded warehousing. So that in itself and the objectives of decarbonization that we have for the next 20 to 30 years, it's a super cycle that's in front of us.
Yeah.
And as I said in the keynote last year, we got to get ready, but I don't think we are. due to the lack of investment that you touched on for the last 10, 15, 20 years. We're not ready. So it's going to be interesting times. I think supply and demand fundamentals are going to prove themselves out once again here. So as we said, I think all of us at the panel here, I don't think anyone would disagree with me that we're undervalued, but I think times will change once we get out of this period of uncertainty.
Paul, what about you on an interest because you're copper?
Yeah, I mean, what's been interesting is that I'll never forget. I mean, you know, part of our marketing. I mean, we're also listed on the NYC American, so we do a lot of marketing in the U.S. And I'll never forget. And it was a few years ago. I'm going to say, maybe 4 years ago, the very first time we went to California. Well, I mean, we'd been to California a few times. There's some investors, you know, particularly in San Francisco, that area. And suddenly I had a fairly full room. And everybody, and you know, this is right when Tesla was coming out. And, you know, I'll be honest, there was a lot more younger faces than I'm used to seeing in the mining investment forum. And they got it. And they said, look, we're excited about this. We think that electrification is going to be the future because of greenhouse gases. And it was just California that was saying that. But I saw this whole new group of retail investors that I'd never seen before at that time in California. And then you sort of saw it spread. Now, as you know, I can certainly relate. I mean, are we seeing it in the commodity price? Yes. Are we seeing it in the equity price? Not really.
Exactly.
But
right?
as we know, I mean, that gap will close as people, and I think the thing is that the average investor, you know, isn't really sure, well, okay, we're at 420 copper. Is that going to last forever, or are we going back to 250? I mean, as for all the reasons that you brought up, there's zero chance of us going back to 250. I mean, the next step is going to be above $5, and I don't think it's ever going to return below that. So I think once that happens, once we stay here for a while, you're going to see, you know, the equity prices begin to sort of match the commodity prices. And, you know, so, I mean, right now is a pretty good opportunity for investors.
I mean, it's probably all related to also the broad markets and how they were just sailing for so long on Fed-fueled energy. And so why bother with something like copper or zinc? Rohan, what about you? Have you seen does anybody like you because you're zinc?
In the last 2 months, I can say for sure, you know, we've had more inbound questions and looking for, you know, a zinc story that they can believe in. Obviously, we have not seen that, you know, reflected in a stock price, and that's, you know, similar across peer companies. And it's a relatively, you know, small group. You know, unlike, you know, gold, I was in gold for 15 years, building Wheaton River and Gold Corp. You know, and there's a whole list of juniors. You know, very few analysts, you know, cover zinc, more on copper side, clearly. But and you look at their list, and it's, you know, it's a handful of a dozen, 2 dozen max of companies they're covering. And so when investors, you know, come, you know, asking, they're looking amongst a very small group. And then further to Jeff's point, you know, importantly, that's a very small group of developers and explorers that are then going to become, you know, mines in the future. And, you know, there is a big, you know, gap coming. And I think, so we have had, you know, far more inbound, you know, interest, even just last week in a one-to-one conference in New York. And so both from a kind of small fund manager level and, you know, more institutional level. So, I mean, hopefully, you know, that continues, and we see that continue. But there's a, you know, big disconnect between the price and even for producers. I mean, we're not in production, but you know, the valuations on a multiples from production at these high prices are, I think, as Jeff pointed out, extremely low.
Absolutely. That fire hose effect that you sort of referenced with the limited number of equities will play a role for the investor side of this for sure. When, I think I'm safe to say when, the investor interest does turn into the space. Okay, so that's sort of the institutional and retail investor in the space side of things. What about the miners, so the majors, those who might take interest in companies like yours? Obviously, Rio has already moved into Western Copper and Gold. I referenced that one of the reasons that we haven't seen a supply response is conservatism from the majors. I'm curious your experiences, inbounds from them, you know, communications that you've had, what they want, what their hesitations are, what their timelines are. I'm just curious what you hear from the majors who are obviously another critical part in supporting new mines. Who wants to go first?
Well, I think for the majors, there's still, there's been a lot of consolidation in the mining industry. So if we talk about the big majors, the global majors, they're looking for tier one assets. And I think my colleague has, as he said, it's the fifth largest in the hands of a junior. So that is of interest. But if it's not the largest, they're not interested.
Which is so interesting because they're so conservative on spending money. And if you want to build the largest, it's going to cost a large amount of money. So anyways, it's just an interesting balance there, right?
It's a matter of going through the process for a major. They'd rather it be a tier one asset than anything else because it takes their bureaucracy as much time to deal with a tier two asset as a tier one. Yeah. So that's kind of but that's going to bite everyone, right? We're not going to meet the objectives of decarbonization and everything you laid out if we continue that way. So Teck has just started a new initiative to look at smaller zinc plays.
Oh, okay, interesting.
So it's starting to turn, and we're obviously, we're just, all of us are probably, I know for myself, continuing forward, de-risking the project and waiting for that turn. But when it comes, I think it's going to come hard and fast. Yeah. And that'll be good for investors. It'll be good for everyone. See some, the development of mines in Canada, like, look, it's our bread and butter. Forestry and mining has been our bread and butter.
Yeah,
it's what
for sure.
The ripple effect of those industries has created our country and what we live on. So I think it's an important part of our fabric.
Paul, what was your experience with Rio? What thoughts might you bring to the table on this? Not necessarily, just.
Well, I like Jeff's point about bureaucracy because it took a lot longer than I thought. I mean, the story of Western Copper and Gold, Gwen, and you know it. I mean, we've been developing this asset for 10 years. And it wasn't until copper was over $4 a pound that people started knocking on the door, and then they start knocking. And, I look at Rio Tinto as a perfect example. I mean, last year, Rio Tinto dividended to their shareholders $16 billion. They had nothing to spend it on. So they dividended. I mean, I know, I actually had to double check that. I said, that sounds wrong, but I double checked.
Is there a decimal point?
Is there a decimal point? No,
here?
$16 billion back to their shareholders. And, their shareholders are, and this, as people in this industry know, M&A only happens at the top of the commodity market for weird reasons, even though everything is slightly overpriced. And a part of that reason is facts like that, because, their shareholders were actually a little bit annoyed and saying, really, you can't find something to buy, you can't find something to build. And so they start knocking on doors. And so, but, I mean, when copper was $2, I couldn't get my phone calls answered.
Right.
It's very interesting.
So interesting. Rohan, do you have anything to add to this conversation about majors and why they may or may not be interested in M&A?
Well, at least as far as majors calling us, I can just say crickets. But overall, I mean, I do expect and would expect consolidation in the industry as we get up the curve. I don't know if that's how soon that is, but it's fairly simple one to look at the global supply, which has been discussed, but then in particular, the supply curve or the production curve for a number of large companies. In particular, Teck. I'm not sure I fully understand that announcement that they made about zinc satellite, whether they're looking to divest or reinvest but at least on the zinc side, it's pretty clear that within 10 years, Red Dog will either be out of production or very low production, and there's almost 10% of the entire market. I think that alone is a factor that needs to be considered in the zinc space. And then as we talk about critical minerals, to the extent governments and the public care about supply chains within a region, strategic within, say, North America, let's just say, then that's an even greater compounding of a lack of North American produced zinc. And I think people will be at some point turning to look for who are the next, where's the next production coming from, not just globally, but specifically in North America.
Fair enough. Yeah, for sure. Okay, speaking of North America, or bringing the conversation towards location a little bit. I mean, as zinc and copper sort of operators, you're obviously aware of, familiar with your environment. So who your competitors are, who the peer projects are, how things work for them, and then interest from investors, from corporates in jurisdiction, and sort of what role that plays in all of these different things. Do you want to speak, each of you, a little bit about the role of jurisdiction, how it's been for you? So pros, cons from where you operate, from a government standpoint, and then from an investor or major standpoint as well. I mean, we always talk about how majors don't want to move into a new region unless they can see themselves setting up shop there for an extended period of time. Maybe if it's with Paul's project, then they can just do that with one project. Or maybe if it's with a smaller project, they might need, they might want to have several opportunities in an area. So sort of prospectivity relative to the rest of the world, support from government for whether or not it makes it possible. Rohan, why don't I let you go first on this one? Sorry, I don't mean to put you on the spot. I was trying to give you an opportunity to,
Sure,
Jeff
and-
to not say everything.
Okay, no problem, thanks.
Say, how long do you give me to answer that question?
Yeah, I mean, I think jurisdiction is is extremely important overall to investors, and, in particular, say macro, North America, Canada specific. I have spent most of my career throughout North Central and South America in most, most countries. And obviously, in some, even when things, may have issues in strong jurisdictions like Canada, they're not the same as when things go south, in other places. So that's important. Having said that, and I'm not sure who's here from the JNWT now. I know they were here earlier. But, I'll be blunt and say that the recent Fraser ranking of Canada jurisdictions, I think, is warranted. And I think the NWT has some issues that it needs to overcome in particular in terms of permitting frameworks and timeframes. And I think that's from my point of view, that's likely why they rank where they rank, which is in the I think 10th out of 12 Canadian jurisdictions.
Right, okay.
And so I think they should be taken into consideration, and other investors look at that, not just the rankings, but they look at what the implications of that mean. So we had a permit delay at the end of last year where we had $20 million US lined up to start our first winter road access. And here we are 6 months later, just about on the cusp of completing something that I thought was going to be done by January 15th. So it's, and then this project's been in a number of different permitting, cycles over time. So I think, Canada, it's great. We have some great announcements coming. I think some visionary things from a country macro point of view, but that has to trickle down to how bureaucracies and other parts of the system work. To you can't say you're open for business at the top, and then have the kind of challenges that I think most companies face. But I can speak for my own.
If we did get the kind of increase in mining opportunity that I was talking about, whether it's lithium or graphite or whatever, the price is going up and therefore there being way more opportunity. Do you get the sense that population-wise there's interest in being more open for business in NWT, and it's just a matter of it just takes time for these things to change? That's a bit of a nebulous question, but has that shifted at all in your experience?
Interest from whom, you're saying? Sorry?
Interest from, is there any momentum towards wanting to shift that? Because related to it being green, related to it being supplying the green revolution? Or is that too theoretical?
I mean, I think there is, but, just like with the federal government, I think there's a lot of things that are said at first, and then actions are what's important. We're now seeing those actions at the federal level, at the territorial level. I think there needs to be more action.
Gotcha. Okay.
But as far as investors, I mean, they're very much eager and willing to come. I mean, there's higher costs of doing business in the north, which I think was mentioned earlier. But there's significant exploration potential and projects that are shovel or very near shovel ready, and investors are that was just one example. We're also, although we're public, we're 50% owned by resource capital funds who've put in significant investment over the past 5 years and are willing and ready to put in additional investment, including just in the last few weeks we announced. But we need from my point of view, we need all stakeholders working together, and that includes obviously Indigenous governments, which I think we have very strong support from, but all layers of government as well.
Okay. Paul, you're in Yukon, which is the best known of the territories, especially in terms of mining.
I think you could just say the best. Just kidding.
What could you add to the jurisdiction conversation around, just around majors, around investors, any of it?
Yeah, I mean, I think that, I mean, I'll talk specifically about copper. I mean, obviously, most of the world's copper comes from South America, and in particular comes from Chile and Peru. And, you know, these are two countries that, I mean, if you look at Peru, there's, you know, large protests against mining on a fairly regular basis. I mean, the major mine, Las Bambas, I think just reopened, you know, after being shut down because of protests for, I think it was 3 months. In Chile, they're talking, you know, the word nationalization has come up a number of times. I mean, I got to tell you, I mean, when I'm talking to, you know, our partners at Rio or other majors, you know, Canada looks pretty good. You know, you know, it's one of those things. And the other thing is the U.S. I mean, let's not forget that the U.S. is a fairly significant producer of copper. You know, the president changes, and suddenly 3 copper projects are put on ice immediately in the U.S. And so, I mean, this question comes from investors to me. Well, what happens if the prime minister changes? I said that really doesn't actually impact that significantly what happens. I mean, I certainly echo, you know, the comments here about permitting and permitting timelines. I mean, I think it's something that all of jurisdictions are challenged with, and you know, certainly the Yukon is no different from that perspective. But I think that on a global scale, when people look at places that they want to invest, Canada looks pretty attractive.
Okay, there you go. Jeff, what do you have to add?
Well, you know, I'll touch on permitting. Rohan talked about the NWT. I was at a luncheon because of the Gaspé Copper Project this week, and there's an objective that the government in Quebec is putting on the table to try and reduce permitting timelines by 35%. I think that's what we have to start doing. Continue to protect the environment, but get the projects online that generate the benefits and deliver the metals to green the economy. But we got to get through that. So we got to learn more about what mining is to better evaluate the risks and get them permitted. Yeah. Or everything's going to cost, everything that you buy is going to cost more. So we got to get on it. I think that's a big challenge in what Gwen laid out and what we're talking about. I think permitting's not a business. Mining is a business. Permitting is a process to protect the environment. But let's not overdo it and drag on projects because we just won't be able to deliver. We want to help decarbonize, but we have to be able to get into production. And if an investor can't see that timeline clearly, we were talking about it just before, the money will go elsewhere. It's that simple. That's what an investor is looking for, a return. So he's not there to put his money in his RSP and wait 10, 20 years to see something permitted. A timeline that's respectable is about 3. So I won't go on and on, but that's one challenge. You know, with regard to jurisdictions, after being in the business for quite a while, my partners and I, we like to drive to our projects. And so in the case of both Pine Point and Gaspé, these are former brownfield sites. And for base metals, that's important. Because diamonds, you can take it out in a suitcase. Gold, you can pick it out and take it out in a truck. But we need trains to haul out our concentrate. We need roads for access to bring in the bigger equipment. We need electrical substation because there's significant power to generate. In the case of Pine Point, there was, back in the day, when the government built a railway from Edmonton to Hay River and into Pine Point for that project. And, you know, they built the Talston Dam and put the electrical substation on the project. That helps us going in to develop that project. Because if I had to build a road, a rail, and a power station, my CapEx triples. Which is just doesn't, in this market, we can't do it. Like, we try our best to develop projects, but so we like to drive to our projects. We like Canada as a jurisdiction. And I think all of the provinces and territories have to look at how can they deliver their projects. And it is going to take, as was said, everybody to make this happen. And the benefit is in getting the mines started and seeing the benefits for the communities, for the country, and all of us globally.
I just want to follow up on that quickly. There's a question in the audience that I'll get to in just a moment, but a quick follow on to this. You've all had permitting experiences at different levels of project recently. What is the slowest part of permitting? Is it an insufficient number, like insufficient army on the bureaucracy side? Is like, what is it that makes it take so long? And I guess I'm asking this in the hopes that there's a constructive angle to it. Like, is there a way that it could be fixed if there was motivation to fix it? And I don't mean fixed. Permitting is obviously very important. But what is it that takes so long?
Well, I'll just start on that. And, you know, look, I graduated from a class in 85 where 35 people. There's been 10, 20 years where it's less than 10, less than 5 in geology and mining.
Right.
I think we got to start with educating people what is mining and the benefits of it. It's a great industry. I've worked at mines all my life. I love it. Right? But we have to get people back into school because we're looking now, and you know, we have this big gap. We all talk about it. There's older guys like me, and there's some young people, but there's not many people coming up in the ranks. So on the permitting side, they have to have that knowledge as well to be able to understand us on the other side of the table.
Yeah, for sure.
And that population is decreasing because of the last couple of decades of lack of investment, lack of projects, lack of starting projects, lack of people working in mines. So that we've lost our way a little bit, and don't get me started on what happened with Noranda and Inco. Those were companies that were our greatest, you know, I think, endowment of having big major companies that they explored, they developed, they produced downline products, and we've captured value all through that chain. Now we're juniors. I don't have a smelter. I don't have a, right? So it's, and then that led to just a different market or a different situation. But I think we got to start with developing more people working in mining, and we may have to go internationally to bring people in, because if people don't go to school, they're not going to be able to understand what we're talking about on the other side of the table.
Yeah, fair enough. Paul, what's you don't know anything about Maven.
Yeah, know a little bit about permitting. I mean, I think what's happened with permitting a little bit is that the bar is continually raising.
Yeah.
You know, one of the things that, you know, when I'm talking to my board and we're talking about permitting, getting into permitting, it's like, well, if we wait a year, it's going to take us longer. We wait 2 years, it's going to take us longer. And so the bar goes up and up and up.
That's true.
And I think that jurisdictions, more mature jurisdictions, you know, they look at their permitting, and it's taking, you know, when it was first the legislation was passed, it's 2 years, and it's 3 years, and it's 4 years, and then they stop and go, okay, this is crazy. We have to go back, reset this, redo it. And that, I think in the North, just the way that, I know this from the YesUp legislation, and I'm sure in the NWT it's the same, just the way, and it's a little bit of a blip of it being a territory rather than a province. The legislation has to go through the federal government, and it just is a very, very difficult process.
Okay. Interesting. Okay. Rohan?
Yeah, in addition to those comments, I would say the lack of predefined timelines, and even if there was some, you know, range and, you know, ability for slippage, clearly there's certain things, you know, that need to be done, but that's the issue, and there are other jurisdictions where they have predefined timelines. If I'm correct, I think Australia and Ireland are two places. And then, you know, in addition to that creep over time, it's also, I think, the, you know, in my experience, you know, sort of continuously, you know, coming back for more information with, you know, lack of where's that decision point to make decisions.
Fair enough.
And that would bring investors back when they see a predictable timeline.
Fair enough.
Thank you all so much for joining us for the Invest Canada North Forum. A quick thank you to our sponsors, Goldterra, Talicho Investments, Summit Camp, Klondike Gold, Metallic Minerals, Granite Creek Copper, Procon, who's celebrating their 30th anniversary, Sitka Gold, Smalls Expediting, Norzinc, and CMP Group. Special thank you as well to the moderators that we had today, Byron King, Gwen, Preston, and Daniela Cambone. It was great to have their expertise to guide us through these conversations. We know it's a busy PDAC. We know you guys, a few of you, had to literally run from media center and meetings over here, so we appreciate the extra footsteps it took to get here. Thank you so much. All these presentations were recorded, so anything missed this morning or this afternoon, investcanadanorth.ca, and we'll be releasing more information and presentations in the coming months as we wrap up our third year of this PDAC project. A special thank you to our territorial partners, Yukon, Northwest Territories, and Nunavut, and of course to Canada, the Canadian Northern Economic Development Agency. That's why we always say Canor. That one takes, it's like a whole breath just to do that. So thank you. Have a safe and productive rest of your PDAC, and we're looking forward to seeing you on the road.